2 days. That's all that's left before something hits the silver market that hasn't happened in decades. 48 hours from now, the contracts expire, the moment when paper promises must become real metal. And this time, the metal's missing. It's not a rumor. It's line by line in the exchange data almost no one reads. A gap so wide that even veteran traders are whispering, "The vaults are empty." If they're right, then in 2 days, the world's silver market meets reality. And reality doesn't negotiate. Let's start with the uncomfortable truth. Almost all silver trading on Earth isn't real silver. It's paper, electronic contracts bouncing through algorithms thousands of times a second, pretending to represent bars that barely exist. For every ounce of real silver in vaults, there are 300 promises written on a screen. 300 claims on 1 ounce. That's not a typo. That's the foundation of the system. It's like 100 people showing up at an airport gate with tickets for the same seat. And nobody's worried, because nobody ever tries to board at the same time. Until now. Behind the scenes, something's changed. Buyers aren't rolling over their contracts anymore. They're asking for the metal. Delivery, not digits. And that's the crack the entire system wasn't built to handle. Because when even a tiny fraction of traders demand real silver, the math snaps. COMEX can print contracts. It can't print metal. We don't force anyone to like, share and subscribe. We believe in valued content. If you found valued content, please like, share and subscribe our channel. If you don't find valuable content, then run away from here. Here's why the next 48 hours matter. Every few months, futures contracts hit a deadline, settlement day. Normally, traders just swap one paper bet for another and move on. This week, record numbers are saying, "No thanks, we'll take the bars." And the vaults? They can't deliver that much. We've hit the point where the demand for real silver collides head-on with the fiction of infinite supply. Think this is some fringe theory? Ask the data. Global silver stockpiles are at their lowest levels in more than 20 years. COMEX registered inventories alone are down over 70% since 2020. London's vaults are reporting the same decline. Meanwhile, industrial demand just hit an all-time high. Silver isn't just money anymore, it's infrastructure. Every solar panel, every EV battery, every phone circuit. Take away silver, the modern world dims. And here's the kicker. Manufacturers are now competing with investors for what's left. This is what insiders call a collision of worlds. The monetary world and the industrial world fighting over the same ounces. That's never happened before at this scale. Someone's going to run out first. When the next delivery window opens and the metal isn't there, exchanges will have 2 options. Pay cash instead of silver, or freeze contracts entirely. Either one kills confidence overnight. Because once you admit you can't deliver, the illusion ends. If you think silver's price will just rise gradually, think again. When gold faced a similar squeeze in the 1970s, prices didn't move up, they jumped off the chart. In 1980, silver went from $6 to $50 in 11 months, and that was before the entire global economy ran on electronics. Today, the leverage is far greater, the supply smaller, and the trust thinner. Every trader who remembers that chart looks at the current setup and sees a loaded spring. This week could be the moment it snaps. But here's where the story turns strange. Prices aren't screaming higher, yet. They're being held down by the paper market itself. That's the irony. The same system that's running out of metal is pretending nothing's wrong. It's like watching a dam crack while the gauge still says normal pressure. Nobody panics until the wall gives way in one loud second. So if silver isn't moving big today, that doesn't mean safety. It means compression, the kind that always releases fast. Here's what nobody on mainstream news will say. The silver shortage isn't about mining, it's about trust. Once faith in paper silver breaks, it doesn't just reprice the metal, it rewrites every market around it. If people learn that commodities they thought were plentiful are actually scarce, inflation isn't a number anymore. It's a mindset, and mindsets spread faster than viruses. That's what scares the Fed, the Treasury, and every big bank trying to smooth this story out. And now, the question I keep hearing from viewers, is this hype, or is this really happening? Here's how to tell the difference. Watch what the people inside the system are doing. Mexico just restricted silver exports to protect domestic industry. Refineries in India are working 3 shifts to process imported bullion. Private mints in the US are sold out months in advance. Major banks suddenly stopped publishing daily inventory changes. That's not hype, that's preparation. They see what's coming. Now, I'm curious, if this were any other market showing a 300-to-1 leverage ratio, would you call that normal or insane? Let me know what you think below, because silver could become the signal for how every other overstretched asset reacts next. And if you want to see what happens when reality finally breaks the illusion, make sure you're watching here, because we'll walk through the fallout as it unfolds hour by hour. Back to the timeline. 48 hours. Once those futures settle, one of 2 things happens. Option 1. COMEX finds a way to cover deliveries, maybe through emergency swaps with London. That kicks the can another month or 2. Prices spike, then calm, temporarily. Option 2. They don't. And once they don't, the price of physical silver breaks free of paper entirely. Then it won't matter what spot price says. Owners of real metal will start naming their own price. That's when the real panic starts. Because remember, silver isn't like digital dollars or crypto. If you don't have it, you can't fake it. There's no algorithm, no bailout, no quantitative easing for an empty vault. Once it's gone, it's gone. That's what makes this countdown so unsettling. At some point, someone powerful realizes they can't roll their contracts anymore, and that realization spreads. That's the financial equivalent of hearing the first crack before an avalanche. You can almost hear it now, the ticking clock of a market that's been pretending for decades that supply is endless and delivery optional. But this week is different. This week, delivery is mandatory. Paper meets metal. Promises meet physics, and physics always wins. If silver breaks out in the next 48 hours, it won't just be a story about a shiny metal. It'll be the moment people realize the world's financial foundation is thinner than it looks. Because when one metal exposes a lie, others quickly follow. What happens when investors demand real copper, real oil, real dollars backed by anything tangible? Nobody knows. But it starts here, in 48 hours. Tick, tick, tick. Don't forget to subscribe channel.